the challenges of banks nowadays, and I don't want to go into details here. You guys all know this. Banks have a couple of problems or challenges to overcome, and there are numerous studies telling about that and how people think about it. What's interesting is that this is globally, it's not only Frankfurt. We are currently, my company, Köpfe, is currently also present in Shanghai at a trade fair, and we talked also with a couple of Chinese banks. They also have challenges, a little bit different, but it's a global system we are talking here about, or phenomenon. And everyone knows it, but only 20% of the people are really, or of the executives are really prepared to address those challenges. And we also had a lot of presentations today talking about new technologies, about all those buzzwords you see here. I think there are great solutions available. Unfortunately, a lot of them are really big IT projects, time-consuming, and they need a lot of new know-how you currently don't have in your company. And of course, you can go to the fintechs. I think downstairs are also a couple of really great companies which offer new ideas and new services. But I would like to show you which great data you already have very often in your organization and which you can leverage to overcome some of those challenges. Because this is no commercial, this is the only slide talking about Köpfe. We believe in the power of relationships. This is our basic belief. This is how we do business. This is very successful, and we have been working in the past with a couple of big banks in Germany, but also in foreign countries, and they have been very successful. And I would simply give you a couple of examples. And I guess you are also believing in relationships, because basically this is why you're here. You're here to build up relationships, to meet new people, to exchange know-how, to learn new things. So I think there's a good basis in this room. But, however, we should look at the connected data. Which data enables us to leverage relationships? And here I think many companies and banks are doing not a good job in the moment. There is this report of Seagate who says that the worldwide data volume is growing massively. And until 2025, up to 175 zettabytes. I have no idea how many zeros you have to add to that number to have zettabytes, but if you would save the data on CD-ROMs and pile them up, you could fill the distance between the Earth and the Moon 23 times. So it's quite a lot of data, I would say. But unfortunately, it's not connected. This is something we very often forget. We collect a lot of data about our customers. We collect many attributes. We do analytics on it. We get interesting insights, but very often you forget to look at the relationships. And this is what I would like to show you. 3 examples. All 3 from the financial service industry. The first one is a sales use case. We had a large German bank who wanted to acquire this company in the corner. And what you typically do if you want to acquire a company, you either send a letter, or you send an email nowadays, or you call. You call at the reception and say, hello, do you want to buy my product? And this is not very successful. And also in this case, they were not able to really speak to this guy you see here, that is the CEO of the company, because they simply did not get through. He has a great assistant, obviously, doing a good job, but they were not able to get in contact with him. So they started a project looking for the relationships in their data. What did they find? They found that they have a relationship, a customer, which is this company on the bottom of the page. Trinkgut Rhein-Ruhr GmbH, a very German name, by the way. Probably difficult to pronounce in English. A very satisfied customer with Thomas Nuhn, who is the CEO there. And when the bank looked for the relationship between those two companies or the CEOs, they found out, wow, they are together members in the Chamber of Commerce in the city of Cologne. So they both know each other because this it's just a group within the Chamber of Commerce, only 17 members. You see the little number there. It's a pretty small group, and they know each other. What did they do? They approached this guy, Thomas Nuhn, and asked for a warm introduction to his friend or colleague, Udo Bernecke. And they got the appointment without having to cross the assistant. So that was a success. And this is also, you can find it in many different research studies. Warm introductions, referrals are successful because many buyers start the process just with a referral or introduction. So what I would like you to do is basically close the gaps in your data. Try to find the missing links you need to make business. Second example. This is also an example from another bank, having a big headquarter here in Frankfurt, and they were looking into their private customer base. And they had this guy here. Not very interesting from a private perspective, they thought. But when they checked which connections does that guy have, they found out that he's the owner of many, many companies. And if you look at his surname, which is Ja, that's the name of a big family in Germany owning many companies. So that bank started doing two things. One is they checked all their retail customers and identified the decision makers. That offered them two things. One was offering those customers a better service, offering different products. And in the corporate banking, they tried to acquire the companies as customers. And we applied that strategy with a Swiss bank, and they did it one step further. What they did is really drilling down the whole ownership structure and calculating something they called wealth index. So they used the estimate of the turnover or the real turnover numbers of the companies, depending what you have available. They weighted it with the amount of shares someone is owning directly or indirectly. Like, for example, if you look at this company here, Hufler Airport Gastronomiegesellschaft. This is indirectly owned by John Young. So you can add the value of this customer to the wealth of John Young. And by doing that, they got a profile, a wealth profile of all decision makers. And they used this to acquire rich people for within their wealth management. And just as a rule of thumb, depending in which country you are active, 8% of your B2C customers are usually also decision makers of companies. Some of small companies, maybe startups, but some are also quite interesting because they're decision makers in large companies. What you need to do to really use this information is break down the silos, because you need to, or the people from the retail business need to talk to the people in the corporate business. You need to share this information, and you need to build on joint strategies to approach the person and the company together. third example, and this is kind of my favorite example. You can use this to reduce your risk or to prevent fraud. And this is an example this is from an insurance company, and I had to mark this company. This was a company the insurance identified as a fraudster. And what they did now is they looked which other companies and persons are connected to this company. And as you can see, there are a lot of companies connected, most of them with blue arrows, meaning those are subsidiaries of the company in the middle. And the people around are mainly either shareholders or the management of the company. You can see on the top there is a subsidiary also having this exclamation mark in the purple circle. This was another company which did fraud to the insurance company. And then they checked who else from those companies is customer. And those you can see in the greenish circles. So guess what? What will happen next? The holding company already did fraud. There is a subsidiary which did also a fraud. The other companies are highly potentially also fraudsters. And the insurance company now is looking very thoroughly in the business relationship they have with those companies. And in general, what we found out with the insurance company, but also with other customers who did this example, one trouble spot you have in your customer portfolio can infect up to 5,000 other customers, directly or indirectly. And this is a huge potential which you can very easily identify and eliminate. But you should do it even one step further. This is again a banking example. Hebra Event Gastronomie, I'm really not sure what they are doing, something with restaurants or catering, I assume. They applied at a bank for a credit. The bank checked the regular credit bureau, everything was fine, they wanted to give the credit to the company, and then they checked again the network. The CEO is Wolfgang Heer, and he is also 50% owner of this Gap Securities company. And if you look at Gap Securities, the other 50% are owned by this guy, Frank Hanebut. Oh, someone is laughing. He's quite famous to at least some of us. He's the boss of the Hells Angels. So the bank decided, no, we don't want to have business relationship with Hebra because they are in close contact with the Hells Angels, which are kind of known for money laundering and other creative business ideas. So also secure the onboarding. Use existing data which is already available within your company to reduce such risks. And that will help you to overcome at least some of the challenges the banks have in many aspects of the business. And this is basically why we love networks, because they are easy to use, they give very quick results, and you don't need any big IT project or whatsoever. Does it make sense? We think yes. Unfortunately, many banks are not doing it. We do have a couple of customers who really love to do it, but still it's not very widely done by the banks themselves. Why? The mindset is very often focused on single data. If you also look at all the modern technologies, they always look into single entities and try to analyze the single entity. The systems, banking systems, but also from industry companies, systems, technology is very often focused on single data analytics. And very often, You simply collect only data about your business partners. You don't collect the missing links in your network. And this is something which we think should be changed because you get a broader picture and a full picture. And this is why we love networks and why I hope you will also love networks. You can come downstairs, we have our system here. It's quite fun to look in it and to see the links between all the different business partners and also the companies you might have business with. So thank you very much, and I'm not sure if we have time for questions.
Maybe one or two questions. Fascinating presentation, by the way. I thought it was really interesting. Okay, Petra, thank you so much.
Thank you.
Quick little change of plans. We have a birthday to announce. Holly, can you come on the stage? Yeah. Which one of us? Yeah, come on the stage. We just want to say happy birthday to you. It's his birthday today. Yeah.
Alles Gute zum Geburtstag nochmal, Buddy.
Dankeschön.
Unser Steve.
Okay.
You sing that the summit will be a success, okay? Let's try. What? Like, can you sing happy birthday?
Yeah.
Happy birthday to you. Happy birthday to you. Happy birthday, dear Holly. Happy birthday to you.
Einen Satz soll ich vielleicht noch sagen. Ich wurde auf die Bühne gelockt. Wir müssen unbedingt sofort die Stühle für das nächste Panel umstellen. Die müssen zwingend da sein. Dankeschön. Die teile ich übrigens gerne später.
So, out of the way. You've got two microphones, so this will be enough. I'd like to invite Christina Richter onto the stage. She'll be moderating our next panel about China. She's an independent communications expert and an expert on China, and she's also written a book called Digital China, about China and digitalization. So please welcome, and the floor is yours. Panelists also too, come on the stage if you could,
Yes,
please.
if my panel, is that microphone on?
It's green. Yeah, it is.
Okay, here I am. So, yes. Let me give them all a second so they can sit down. So I want to welcome you all to our China panel, and we're talking about the future of banking, and we are looking at China. And that is actually something interesting, because usually when I talk to people about China, I realize that for any digital innovation, most of them still look to Silicon Valley. And then in the meantime, over the past years, China has actually evolved into a digital innovation hub, and there is so much going on, there is so many new technologies evolving, and I would like to take you through the next 30 minutes and my amazing panel and have a conversation around that. So we only have 30 minutes, so I just briefly want to introduce you who I have on stage here. I have Harald Pat, who is the managing director of Fosun Group. I have Arnold Ma, who came here all the way from London. He is the founder and CEO of Cumin, which is a digital marketing agency. I have Michael Wang, who is a serial entrepreneur and the founder and CEO of Labacross. I have Jill Roeder, who is product chief officer of Ginmon, and Hayden Huang, who is joining us from Tencent Cloud Europe. So yes, we are talking about China, and when we look at China, there is one thing that came to my mind when I started thinking about this topic, and it's that there are a lot of ecosystems that have developed over the past years, I would say in the past decade. And when you look at Chinese consumers, more than 1 billion of them has some sort of smart device, either a smartphone or a tablet. And they usually spend around 3 or more hours on these smartphones, basically managing their entire life around it. And when you look at the big players, there is basically 3 names that have internationally also basically made a name for themselves. It's Alibaba, it's Tencent, and another name, especially in the financial sector, is Ant Financial. But since we have someone from Tencent here today, I would like to address my first question to you. So, when we talk about ecosystems and when we look at WeChat, I mean, there is a lot going on. You can do a lot with WeChat during your daily life. Can you just briefly walk us through what kind of services and industries you basically combine on this app WeChat, and what consumers can actually do on a daily basis with it?
Thank you, Christina. It's a great honor to be here. And I think firstly, I got a question to all of you guys. Have you ever been to China? How many people? Oh, a lot of. I think the rest of the audience, I strongly recommend that you go to China, and especially go to Shenzhen. That's really a modernized city. I visited Silicon Valley 2 years ago. I do believe Shenzhen is more modernized than Silicon Valley. Even there's a lot of big technical giants in Silicon Valley. And how can I see the service from our company, WeChat? The best way is that you go to China to install a WeChat onto your mobile phone and apply a bank account and experience mobile payment. You can do everything. Even you want to buy a cup of coffee, you can make a deal from your WeChat, and someone will send the coffee to you. And I have to say mobile payment bring a lot of innovation to the China consumers. WeChat is the #1 mobile payment platform. And in China, in China there's really a cashless society, and a lot of challenge to the government disappeared. For example, there's no robbery, there's no thief, because there's no wallet. Even you got a wallet, there's no cash inside. So that's very interesting thing. So the public security changed their strategy, but no, I think there's a paradox. If you expose more data to the third organization, for example, the government, or maybe to the Tencent, and you may take the high risk to expose your privacy. But in another way, if the world is more transparent, if you are a good man, the world will be very friendly to you. You can apply loan. You can very easy. Just like me, I just applied the loan from Deutsche Bank. I provide a lot of documents and exceed what you can imagine, even from my diploma from university. And and I would tell whether I have a pet, a dog or a cat. Yeah, I need to prove I don't have a dog or cat. So that means I can have more loan from the Deutsche Bank. But in China, Tencent takes a totally different approach. We have the transaction data. We know the daily life of the consumer. We can provide a credit ranking for this consumer. And if the customer agree to share the data with the bank, we can work together to calculate how much this consumer can loan from bank and what's the specific loan rate for the consumer. I believe it's more efficient to bank to improve their efficiency, to improve the customer experience.
I would like to interrupt you there because you said something that I would like to pick up on, and you you said that you can apply for a loan. So we had a conversation earlier where you said that consumers or users of WeChat can actually apply for a loan through WeChat. So, and when I think of what else I can do with WeChat, I mean, I can basically order a taxi, and while I'm waiting for my taxi, I could apply on my mobile phone for a loan. Does that work like that?
Not yet. We are working on it. But if we share the data, we can share the data with bank together. Right now, we already take the project with some of the bank, commercial bank in China, and we share the data, but it must be agreed by the consumer, by the end user. Based on these tens of conditions, we can calculate how much the consumer can loan by the system automatically, and what's a specific loan rate for this customer.
Thank you. I would like to address Arnold and Michael, because the two of you are basically helping international companies entering the Chinese market in one way or the other. And that also has a lot to do with knowing and understanding the Chinese consumer, because obviously the international companies want to reach those consumers and sell them their products, whatever it may be in whatever industry it may be in. So when you look at it, when you, for example, take a tool like WeChat and you use mobile payment, what else does that open? I mean, mobile payment is just one tiny little tool in this entire ecosystem that is connected to a lot of other services, like, for example, e-commerce. You can rent a car, you can call a car, you can order food and do lots of things. So a lot of companies from a lot of industries are actually in this WeChat ecosystem. So how does it work for international companies that want to enter the Chinese market and use the payment as an entry tool? What else is there to do? What else can they do? How do you help them to get to the Chinese consumer?
Thank you, Christina. It's a really good question. So, so WeChat started off as a messaging platform. It's a messaging platform, but it's evolved much more beyond that ever since. And we call WeChat a social OS, a social operating system, rather than a social network, because it's essentially a platform where you can do a lot of the things that you want to do in an operating system, like Windows or the Mac OS X. And in terms of payment and how it can open opportunities for brands in China, if you think about it like this, WeChat is the only platform in the world right now as a social media platform where you can combine customer purchasing data with content engagement and social media and social indexing data. So imagine you could not just segment your audience based on their behaviors, what they like to read on social media, what kind of content they like to see, but also combining that with the products that they purchase at the end of that customer journey. All of a sudden you have a full customer funnel within just one platform, and that's extremely powerful. So that's just one example of what you could do to combine. So what we do a lot of times is combine CIM in terms of like content engagement and also payment. So we call it CIM plus payment. That way you can get much accurate information on how to target your audience, what kind of content converts and what content doesn't convert. But yeah, there's so much more you can do just because everything happens in one platform and under one ecosystem.
Totally agree on what Arnold said. I can just add with some other example. This time with just the other big player like Alipay, because we have a lot of European companies that also want to sell their product, find out their potential market there. We help them to set up the online presence on the Tmall, on Taobao, and they already have their own payment system. In that way, this is not only on a shop, then you have to use like here, you have to use a PayPal, a third supplier. You have already integrated. Also now, there's some new platform, like probably someone heard about the little red book, the bread, also got integrated or work together with the Taobao. So what do you have on the social platform and like influencer, KOL, to tell about the story, recommend the product? You can see the scoring directly show that on the Taobao product description. So that helps the consumer to make their faster decision, to know where this product come from, who has ever used that, what is their experience, what is the rating. So this is another example, just to support to make it clear how this ecosystem works in China.
So it's a very, very actually consumer-centric approach that these platforms are offering. So it's not a company building a service and then throwing it into the market and then see what happens, but it's actually a lot of also listening and looking at the data, looking at the movement within the platforms, within the ecosystems, and then see, okay, what can we do, how can we improve, how can we maybe change the tool or the service to make it even better.
Sorry, can I just add something? I think what you said is 100% right, but also I think China, we got to remember that internet has only been around China for decades. So China, when mobile was released, it was almost like the first iteration of the internet. Because before that, we didn't really have penetration with landlines, with kind of ISPs, with cable. So when the internet came about in China, there was this preconception of what the internet should behave and what kind of platforms should be on the internet. So when the iPhone was released, that was kind of the first iteration in the West of mobile internet that really were effective and user-friendly. People were like, you know, we need a browser, we need this app, we need that app, because this is how we're used to the internet working. But in China, that didn't happen. Like when mobile internet came about, there wasn't a pre-existing conception. So that's why programs like WeChat, like other platforms came about and defined how the internet should behave, how mobile internet should behave. So it was almost built for that purpose rather than adapted from desktop internet, which means there's much better integration of various ecosystems like payment, content, engagement, and this kind of like conception of social OS as well.
You actually just mentioned something that Harald and I had previously discussed. So I would actually raise my next question to you, because it's basically all about legacy and no legacy. So you just mentioned when internet came, mobile basically was there, so you went from offline to mobile straight away. Whereas we have at least another decade in between where certain things established. So when you for example, look at both countries, I mean, you work for a Chinese company, but you're based here in Germany, what do you think are the biggest challenges that German financial institutions and financial companies are currently facing? And could models from China be a solution, and do we have to look closer to those solutions from China?
Yes, thank you. I think looking to China would be a good model for the future, because as Arnold said, people had the behavior. The behavior we have the first time is Generation Z, because they came to the world and smartphones already existed. So they start immediately with acting a smartphone, not with a PC or something else. So when, and also what Hayden said, they have one platform and they add all things in the daily life to that platform. What we have in the German area, for example, is that we have all these services too, but all totally disconnected, and we do not have them on one platform. First disadvantage what we have is we speak about China and WeChat, and the other alternative is WhatsApp based in the US. So WeChat is much more advanced than WhatsApp, but the beginning was WhatsApp, but 2 years before WhatsApp had the telephone function, WeChat had it. So now WhatsApp is running behind WeChat. But what we don't have here, and I think it will never happen because of our data protection rules and everything what we have in Europe, we are so proud on, is having one platform between, and the platform holds the customer, has a touch point, and it decides which services are listed on the platform. That will never happen here. The best example where the German banking industry tried doing something together was PayDirect, and it was not a success. It will never be a success this way. So first thing is they cancel it again and try the next thing where they want to do something together. Because they are totally disconnected. And one thing is like also N26 is doing. It's one platform holding the customer, but not really offering the service by their own. So they put all the services to that platform. And that is something how you can have success like Heiden said with Tencent, that you have one platform and you put all different services to that platform. We have everything is separate. We have a loan platform, we have a fintech platform, we have a payment platform, and everything is totally disconnected. I always have to sign up. But with WeChat, I can order a taxi. I can't because it's not so easy to Heiden. It's not so easy to have to use WeChat and order a taxi because I cannot enter my European account or credit card to that.
Yeah.
It does not work. So perhaps you take that, and then it would be really great because. But this platform really solves all problems. They order food over that platform. It's paid. You don't have a connection to cash anymore. That is good for the government.
But then I have a follow-up question on that, because we said that China, or the Chinese tech companies, have developed products and services and ecosystems that are very consumer-centric. So the question here is it just the companies, the institutions, and the industries that are the challenge, or is it actually the consumer? In this case, us, the Germans, who are stuck in certain ways of thinking. So finance is one industry, and I need a bank. Insurance is another industry, so I need an insurance, and so on and so on. Is that maybe also a mentality question that we have to solve? Because
yeah, 100%, but it will change, like always. It is our behavior. 20 years ago, everyone expected a parcel ordered by Otto Versand in 2 weeks. Today, if it's not there in 2 days, because we change our behavior with Amazon, if it's not there in 2 days, something is wrong. So, and that is also the PSD2 could have been a very good chance to change our behavior, giving the allowance to read our account. So I'm quite open to these things because I think if I'm steered by technology and AI, then I feel quite comfortable because it saves a lot of time to me. And PSD2 giving access to my account and being steered by a company, giving matching things what my behavior is, my interest, is good for me. But and that will also change for a while because if you ask now the people below 40, 30% are open to give the allowance. People above 30, only 10%. But that also will change over the time.
Thank you. I actually want to involve Jill into this conversation. So you are working for Gidmon, and Gidmon is a digital wealth management platform, and you are based here in Germany. So it's a German company, a German fintech. But beginning of this year, you expanded your business to China. And I mean, we've already learned that it's two completely different countries with two completely different ecosystems and probably also mindsets and mentalities. What, from your experience, are the key differences in your offering here in Germany and in China, if there is any? And then also, what is the difference in the people, in the retail investors? Because I'm pretty sure there are some.
I would say the main differences of our service that we offer in China is actually the customer touch points. As it was also already mentioned here in this discussion, Chinese people are used to using the internet in a completely different way than we are. And in Germany at the beginning, we mainly targeted, I would say, mid-age, rather conservative investors who are more used to using, for example, web apps for their banking services, who are not used to using apps for their banking services. So we were not a mobile-first company, but first started with developing a web app for German customers. And in China, it's completely the other way around. You cannot win any customer if you only offer a web app to your customers. They're used to mobile apps, and actually, in fact, they're used to using these mobile apps, not just installing them through the App Store, but installing them through WeChat. So it's also, what's completely different actually is that in China there is an operating system within an operating system. So I think that was the main learning at the beginning, that we actually have to adapt our whole product strategy to the Chinese market. You need to be customer focused in order to be able to win customers. But actually in the back end, our service offering is completely the same. So We use the same kind of banking infrastructure and these things. So everything that consumers or customers don't see is actually the same, but as it affects, or as soon as it affects customers, you need to adapt your product strategy. I would say when it comes to wealth management services, what struck me the most is, on the one hand, how open Chinese customers are actually to using mobile services, online services, digital services, but at the same time we also realized that because China has been a rather closed economy for a little while and just started to open up when it comes, for example, to capital market investments and these topics, that sales channels in China are sometimes very different. So people are used to using the services in a digital or online manner, but they're not always used to buy these products or these services online. Because in China, trust plays a very pivotal role. So actually for us it was also a big learning that we cannot do online sales or just digital marketing, run digital marketing campaigns to sell our wealth management office to Chinese customers, but that we also have to work, for example, with independent financial advisors who have the customer touch points. And then once you access the customers through these, I would say, face-to-face relationships, then people want to use your services online and in a mobile app.
I think that's very interesting, and you basically mentioned another keyword that I would like to touch base with, trust. So I had a conversation with a local banker the other day, and I asked her, so what are the key challenges that you from a traditional bank are currently facing? And she said that the traditional customers of a traditional bank have very big trust issues when it comes to digital tools. So when we look at China, apparently the trust towards technology is not an issue. So they are very digitally savvy. They use technology and technological tools on a daily basis. But what I would basically like to hear your opinions about is, how did Chinese companies manage to run from offline to mobile only in, I would say, less than a decade? How did they get the trust of the people to actually use all the tools that were thrown at them? Because they were not used to them, but suddenly they were there and somebody started using them, and then a hype started around it. It's basically with any new product that comes on the market.
For me, I think there are two key reasons. One is definitely the fact that Chinese companies didn't have that much of legacy systems as banks here, who already developed digital infrastructures in the 70s and 80s and are still fighting with integrating new tools into these legacy systems. So it was much easier for Chinese banks, for example, to innovate at the beginning. And I think the reason why Chinese consumers might be more open to these developments is, I think, that you can feel a totally different level of hunger in China when it comes to innovation. People actually, for example, China has just recently developed an enormous amount of people moving into the middle class. So people who like 50 years, 60 years ago didn't own a lot, were still poor people, and now they've experienced this, how innovation actually drives wealth within their country. So I think that's also a main driver for trust, because they see innovation as a matter to climb up the social ladder, to accumulate wealth, and to give their children the opportunity to live a better life than they did in the past. And I think that level of hunger you don't see anymore here in Germany, because we've already reached, I would say, sustainable wealth already many years ago.
Tom, if you want to add something, and then I would like to ask a final question to Hayden.
Yeah, no, I think you summarized it really well. Thank you. But for me, I think, as you said, success propels trust, I think, in many ways. And in China especially, I guess I have this kind of philosophy of how technology adaptation has risen so quickly in China as well, because almost kind of like the balance of what you invest into changing a system versus a return you get on convenience is substantial in China. So going from like a cash-only economy to mobile payment society or cashless society, as you mentioned earlier, the increase in convenience is massive. But over here, going from like a card payment culture to a mobile wallet culture, the return on investment of changing that infrastructure, the systems, the behavior is not so high. So when you talked earlier about where the consumer or companies are driving, I think it's always consumers, but I think the West will catch up, if not overtake, in the sense that for me, it's always about leapfrogging technology. So going from card culture to something like walk in, walk out, where you don't have to tap anything like the Amazon Go store or Facebook Libra, crypto technology, essentially, like the return on investment of changing our infrastructure and the return on investment and convenience is much higher. So rather than going from card culture to mobile wallet, I think we'll see the West going from card culture to something much, much better and much more convenient for the consumers, and that's when we'll see that big change.
So Chinese consumers, if I summarize it well, are basically very spoiled when it comes to convenience. I mean, everything is at their disposal, and usually it's at their fingertips. So I have a final question for you, Hayden, basically around that. So if you have such spoiled consumers that are just used to having tools at their fingertips that are making their lives easier and more convenient, and they always crave for more, they're curious to try new things, isn't that one of the biggest challenges for a company like Tencent, who has already built a huge ecosystem, but then there's the consumer who always looks for more?
I think that's a big question. And if you look at the history of Tencent, we have QQ to provide the messaging service for a lot of Chinese. I would say every Chinese could have a QQ account. And we have a very smooth transition from QQ to WeChat. And it's very successful. We have done two things to make it very successful. The first one, we recommend the consumer transfer from QQ to WeChat to obtain more features. For example, the group chat and the more easy for the communication and the feature just like a Facebook, personal moments. And the second thing, we provide the feature, the red packet and the lucky money. In China, the Spring Festival, the people will give the lucky money each up to other people. And if we have the red packet feature in the WeChat, a lot of people will use WeChat to install WeChat to join the festival. And the second thing, that all of the people will activate the mobile payments. We have done two things right, and to build the infrastructure in China. And I would say in Europe, especially Germany is our first priority. And we have been working with N26, the new generation bank in Germany. We are the biggest shareholder for N26. And we have been cooperating in a lot of aspects. And I think in the near future, not so far, we can provide a kind of mobile payment for Germany users firstly. And so, because Germany is the first one, and the DACH region, and maybe to France, to UK, the second or the third stage. And I'm not allowed to tell more detail, but if you apply an N26 bank account from your app, you will experience totally different the process to apply a new bank card. And I think it's totally a different way instead of to apply a bank account from maybe the large bank in Germany. Okay.
Thank you so much, Hayden. I think we're running out of time, but I want to thank you all for sharing your insights and your experiences and your know-how with us. And I think we're all going to be around for a little bit, so if you have any further questions, just come up and ask. Thank you so much.
Thank you, Christina. Thanks, everyone. Moments like that, I wish I were still a journalist. That's really, really interesting what I think you said at the end. We now have a break until 3:30. We're a little behind schedule, but we have a coffee break now until 3:30. At 3:15, the speed networking session begins on the networking stage, so another 5 minutes. Otherwise, we will reconvene here at 3:30. Thank you.